Hello, everyone, and thank you for joining us for the East Nashville's Callis Road Industrial Development live webinar and Q&A session with CrowdStreet. We hope you're all safe and doing well. My name is Scott Reasoner. I'm an investor relations manager here at CrowdStreet, and I'm pleased to have several members of the Griffin Partners team on the line to discuss the Callis Road offering. The Griffin team plans to discuss the following topics: some background on themselves and their investment thesis, an overview of the asset and Nashville's real estate fundamentals, key points on their pro forma and their development timeline, and then, of course, we'll open it up for the investor Q&A portion of the call. Before we get started, I have a few important announcements to make. Some elements of our investment process have recently changed, so please listen carefully. The Invest Now button will be activated on the offering detail page at 10:30 a.m., and I'll make another announcement at that point in time. If you'd like to submit an offer today, you may want to open that page in your browser now. You'll see there's now a live timer counting down the time until the Gold Invest Now becomes automatically available, so refreshing your browser is not necessary. Once you click the Gold Invest Now button, you'll be placed into a submission queue and given a number in line. This number will automatically update every 30 seconds until you progress to the front of the line, at which point the page will update again and allow you to submit your offer. So again, there's no need to refresh your browser. The next key thing to note is that at 5 p.m. Pacific time today, all offers will be pre-approved and all investors will be prompted to begin working on their offer documents. Investors will be invited to fund in the order in which they complete their documents, which will be time-stamped by our system. So again, at 5 p.m. Pacific time, you will be able to begin working on your documents. Investors who complete their documents the soonest will be invited to fund, and funds will be accepted in the order in which they are received. Investors who do not complete their documents quickly enough or do not remit funds promptly risk being withdrawn and replaced with investors from the wait list. We'll hand the mic over to the sponsor in just a moment, and after a short presentation by them, we'll open it up for questions. Please note that investors are in a listen-only mode, and if you have a question you would like asked during the Q&A, please type it into the questions box and I'll ask it on your behalf. If you're new to CrowdStreet or you would like a refresher on how to create an investing entity or submit an offer, stay on the line after the Q&A and we'll have a brief demonstration for you. Please note, for this project, offers are due by October 23rd and funds are due by October 27th. And with that, I will let the Griffin team take it away.
Thank you, Scott. My name is Edward Griffin, and on behalf of the team at Griffin Partners and CA South, I want to thank you for participating in this webinar and for your interest in our Callis Road development in Nashville. As you will hear today in this presentation, we have strong conviction about this opportunity to develop a best-in-class asset in the high-growth Nashville market. Griffin Partners was founded as a development company in 1980 and has been actively developing successful commercial properties ever since. Our seasoned development team is working alongside our local partner in Nashville, CA South, who also has a solid track record of development activity in the Nashville market. Our team has been working on this project for almost 1 year, and we are delighted that all that effort is now coming to the point of starting construction in less than 30 days. So with that, let me now turn it over to Andrew Montgomery, who heads up that team, so he can present to you the details of the opportunity and why we believe it is so compelling. Andrew?
Great, thanks, Edward. Scott, if you could go back to the agenda page, I would appreciate it. Thank you, everyone, and excited everyone's participating now on our 6th offering on the CrowdStreet Marketplace. I'm going to take you through briefly the agenda for the day. We'll touch upon us as a sponsor, the Nashville market in general, the impacts from COVID-19, or frankly the lack thereof, our overall investment thesis, and then specifically discuss the location attributes, overall tenant demand in the area, and lease comparables in and around Nashville. We'll go through the Class A physical attributes of the asset, summarize the general financials, and then finally, 7th, the project budget, as well as sources and uses, and then go through detailed timeline from today going forward, as well as we'll highlight some of our key partners in executing this new industrial development. So can we go on to the next slide? As this slide depicts, there's a lot of information on this page. Griffin Partners was founded in 1980 by our chairman, who remains actively involved in our day-to-day activities of the firm. He's actually joining us here today on the call, so we're happy to have him with us. He leads our development team. He's got a wealth of experience over the last 40 plus years in developing projects such as these since the early 80s, and is assisted by the Vice President of Construction, Brad Jadinson. He's also in attendance today. As this page summarizes, we have a deep bench with years of experience to oversee this development project. Griffin strives to select and evaluate each investment opportunity with immense scrutiny, deep market intel, and product type diligence. We strive to underwrite conservatively, as you will see herein, and in turn, hopefully outperform expectations. So on to the next slide. This is a doctored up version of our mugshots here. We're obviously very excited about this speculative industrial development in Nashville alongside our local partner, CA South. We go on to the next slide. As I mentioned in our brief bio, we have over 40 years of experience in developing, acquiring, and managing industrial real estate. We also do obviously office investments, but also industrial. These are a select few examples we pulled off our shelf to provide a glimpse of other projects that we thought were synonymous with the Callis Road industrial development. Our experience goes back years from Houston, Denver, and other parts of the southern US. Our most recent development on the right-hand side of the page was completed late last year for an international rubber company based out of Canada. It's a 70,000+ square foot, 30-foot clear height building with a highly complex manufacturing facility inside. They signed a 15-year lease, and they're fully occupying the space today. If you go on to the next slide, I'll get in now to overall Nashville and the location attributes, specifically Nashville's MSA. Nashville obviously is a very vibrant market and a budding, growing secondary market. Nashville has witnessed exponential growth over the last decade. And as this slide depicts, as you can see, it's the Callis Road project, the yellow star on the right-hand side of the page, shows the kind of the eastward march or the southeasterly path of growth of the population of Nashville, heading east along I-40 and then around Loop 840 down towards Smyrna and Laverne. These green bubbles, if you will, summarize the counties of Sumner, Wilson, where the project resides. Williamson County and Rutherford counties have witnessed almost 2x population growth over Nashville's proper Davidson County. We're excited to report, obviously, this location and securing this site. It's fully entitled with zone for industrial, a 35+ acre site that was assembled over the last year and closed in July. On to the next slide, we can touch upon Nashville and its impacts for COVID-19, which all of us today on the phone, we are tracking intently from an investment standpoint, and the following are a few takeaways of Nashville's resilience to the pandemic. Nashville's unemployment has remained relatively low at 8% really since April 2020. As a sector, we're tracking closely, obviously, TTU or the logistics sector employment. We saw little or no movement in job losses through year-end or through July 19 through July of 20, with only a 20 basis decline in employment in the transportation or logistics sector. Further, over the last decade, job growth in Nashville has been on fire, 2x the U.S. job growth rate. So Nashville itself is an ever-changing and growing city. We don't see any signs of rapid expansion slowing in the near term. This data per BLS shows did see a sharp increase in unemployment in March and April of 2020 of 15%. But since that time, as of August, it's dropped back down to ±8%. So the impacts, yes, have been seen and occurred in Nashville, but we see Nashville continued growth remaining. We can go on to the next slide. Also, I thought it would be important to note some of the corporate relocations and some of the massive users that have relocated or grown within Nashville. Amazon specifically has located along I-40 just west of this project, a titan in logistics and delivery locations, providing its massive customer base same-day delivery service. Amazon is now located in 2 locations on either side of this project. Due south, Amazon occupies 850,000 square foot distribution center along 840 and Highway 109, just one intersection west along I-40 from our project. They're in the process of completing a 3.6 million square foot, 92 foot clear, 5-story industrial building to serve as a key distribution hub for this ever-growing customer base. We believe this is obviously welcoming news for us in our investment here in this project, and it's a testament to the demand for logistics in Nashville, particularly along I-40. These new developments are clear signs for strong demand to come, and specifically for our project. We can go on to the next slide. Here's some of the key takeaways from the recent stats for Nashville's real estate fundamentals. It continues to show positive signs. Demand is outstripping supply on an annual basis. As you can see, the green bars on the right-hand side are outstripping supply over the last plus or minus 5 years. In addition, at the bottom left of the left side hand of the page, you'll see rent growth is exponential at 8% over the last 5 years, greater than the US average. The new product coming online in the area, although most of this new product is large distribution centers catering to 500,000 square foot users and above, is obviously great for the submarket area and really is targeted to a different tenant base. You will see on the bar chart on the right that we had negative new supply as of year-end or as of today, 2020, and that is an unfortunate event because of a tornado that struck Nashville earlier this year that demolished over 1.3 million square feet of space and about 500,000 square feet of competitive product. So those are just a few of the highlights of the rent growth and overall demand outstripping supply in Nashville over the last several years. If we could go on to the next slide. Now I'll transition into just the overall project, our thesis, and more particular on the financials. As I've highlighted on previous slide, as you can see, this is the most recent site plan on the top of the page. Nashville has seen over the last decade a huge amount of growth, and we believe in the short and the long term, the viability of this market as a key logistics area for national and international companies is set in stone, and we firmly believe this Callis Road industrial development will be a strong performer going forward. With the market diligence that you have just reviewed, I guess in brief, coupled with our Griffin team as well as our on-the-ground team in Nashville, CA South, we believe developing this small bay or a light industrial project, in our view, will fill the gap in the market for tenants in desperate need of quality industrial Class A space, ranging in size from 25,000 square feet up to as much as 100,000 square feet. Due to these location attributes, and more specifically our basis in the land, we're able to provide tenants in the market today new Class A buildings, this new Class A building at a discount comparative in rents to more infill competition within Nashville. On to the next slide, we can talk a little bit about the location. As we referenced earlier in our bubble chart, I guess, page, there's a path of growth story here. The Callis Road development is located, we think, in the epicenter of this eastwardly march along I-40 and moving southeast. The strong population growth has helped our overall viability of this project. And just 1 mile south of I-40, which is a major U.S. trade route to cities just east, such as Knoxville and Charlotte, as well as going down south along the 840 connecting to I-24 is a major logistic route to Atlanta, which you can't see on this page, but it's an important point. Nashville's, I guess, we'll call it a second loop. The 840 is just south of the project, as you can see on this page. And this highway will terminate, if you can't just off the right side of the page, will terminate in the city of Lebanon. So in turn, Highway 109 will become the northern route all the way to I-40 and beyond through wrapping Nashville's northeast quadrant. This is an important point because we believe this location, we are a first entrant for this type of product. And as you can see, this particular trade area, in particular submarket, has international corporations with the names such as Amazon, as I mentioned, Under Armour, Medline, FedEx, Starbucks, Bridgestone, etc., just to name a few. Further, the submarket area has various institutional owners. As you can see, all the white boxes with the tenant names. To name a few, institutional owners include Clarion, MetLife, USAA, Blackstone, Duke, First Industrial, Prologis are all owners within the trade area. So in our opinion, overall liquidity upon stabilization of this asset, I don't see a problem with providing good support for a proven institutional trade area for us to sell the asset. We can go on to the next slide. Actually, stay there actually. One thing I forgot to point out on location, thank you, is specifically this building's location and access just off of 109. Callis Road itself, the east-west, just east of 109, has a dedicated and full diamond interchange off of 109. It's hard to see on this graph, but it's important to note. And it has direct access to I-40, just a minute or two way drive time north. And frankly, in my opinion, it's a bit easier to navigate accessing this particular roadway versus Eastgate Boulevard, which is just in Mount Juliet. There's somewhat of a complication of going in and off of I-40 to get to Eastgate. We think Callis Road is a very easy diamond interchange. Further along the east side of the highway, which you'll see in the site plan here shortly, there's a new roadway that abuts the east side of Highway 109. It's a north-south roadway named Genesco Parkway. This was recently completed, provides additional access for our project by the Tennessee Department of Transportation, and just wanted to point that out as additional access for our project's location. Now on to the next slide, just to talk a little bit about our market intel and some of the diligence we've completed from a tenant demand and why we're building this particular product. We obviously need to understand the overall demand metrics. The upshot is the tenant demand for this size of space is fairly large. Our local Cushman & Wakefield team who will be leasing this project, Ben Mosley, with over 20 years of experience within the Nashville market, he and his team receive weekly, if not daily, requests for space across the Nashville metro, and specifically within Wilson County, where this project resides. As of today, they're tracking over 900,000 square feet of tenant requirements, ranging in size from 10,000 square feet all the way up to 150,000 square feet, which is telling for this project size to fill this gap for tenant demand. Go on to the next slide, I guess. Obviously, more importantly, is how we're underwriting and how are we compared to other leases and lease comps in the market. As you will see on this slide, clearly we undercut the market in terms of rate and offering terms. At the bottom right-hand side of the page in green, you'll see the bottom of the table summarizes we have lower starting rates, we have higher average TI packages, and most importantly, we can offer a net effective rent at a 20% discount to other leases completed of this size. Basically, the relative difference between the green $4.66 and the $5.69 for this data set of leases. The reason we can offer this amount of a discount as a new product is due to the efforts by our local partner, CA South and Griffin, acquiring this land at approximately a 39% discount to CBRE's appraised value earlier this year. And please note, the land we are contributing to this project is at cost. So on to the next slide. Now we'll get into the site plan, building specifics, financials, and then we'll wrap up some high-level timeline, et cetera. As you can see at the top of the page, this is the most recent site plan from Powers Brown Architects. As you can see here, you draw your attention to the left-hand side of the page. That's the new Genesco Parkway that I mentioned earlier, bordering the site on the west, and it abuts Highway 109, which is just off the page. Moving from left to right on the page of the buildings, you'll see buildings A and B. Those are both 28 clear height buildings, and buildings C and D moving to the right are 30-foot clear height buildings. Along CA South and Powers Brown, as I mentioned, one of the most, I guess, well-respected leading architectural firms, in our opinion, across the country for tilt wall projects. We landed upon a very efficient, well-thought-out design. The project will have efficient layout with 130-foot truck courts, efficient column spacing, speed bays, including that are 66 feet, I believe, yep, and including 4 dock doors for every 25,000 square foot of space for a potential tenant. And we have more than enough capacity for power, over 600 amps for potential tenants. Further, Harvard Cleary, who's deeply involved in this process, who's our contractor, will provide us a guaranteed maximum contract to deliver this project on time and within budget. We can go to the next slide. Speaking of budget, our total budget today is $31.8 million plus or minus. And as of, I think, tomorrow, I think we're finalizing 100% of our plans and specifications for this project to deliver. We are targeting a 3.5-year hold period with the project returns of, as you can see on the right-hand side of the page, a 20.7 IRR and an equity multiple of 1.9. These are project level returns, and an untrended yield on cost of 7.8, which assumes, what I mean by untrended, which assumes no rent growth between now and stabilizing this project in 2023. Further, we've assumed an exit cap rate of 5.75 and a sale price per square foot of $110 a foot. Obviously, our all-in cost is plus or minus $85 a foot. I will tell you, we have debated lowering our cap rate overall underwriting here due to recent trades in the market, notably a trade that just occurred called Airport Logistics Park, traded per our sources at a 5 cap or $157 a foot.
Similar product.
It's similar product, although it's in a more urban location, granted, near the airport. The general theme, though, to us, it signals that the overall resilience of the Nashville industrial market is very liquid, even during a pandemic. If we go on to the next slide. This is a brief sources and uses. Obviously, it's just a summary of our total debt, total equity, the total project budget. I guess this would be a good point to highlight our loan, which is $20.6 million with Cross First Bank. It's a relationship bank of Griffin's. We have a construction completion guarantee as a part of this loan, as well as recourse obligation to us as the sponsor, totaling over $4 million. And those recourse obligations stay intact, specifically on the guarantee of $4 million till the project reaches a 75% lease obligation, and then the recourse burns down to $2 million when it hits above 90% to the sponsor. We will be obviously released from those recourse obligations on the percentage leased of the project as a part of this loan. It's also worth noting we just received an appraisal just last month from Cushman & Wakefield, prepared for as a third party for CrossFord Bank's valuation, resulted in an asset value completed project with no leases to date of $39.9 million, $106 a foot, and a stabilized value of $51.7 million or $138 a foot. So all of that, an appraisal, it's a good indication of overall values in Nashville today. We go on to the next slide. Talk a little bit about distributions in our waterfall structure, schedule of fees, and the returns to our Crowd Street investors. We, alongside Crowd Street investors on the left-hand side, are pari passu until we reach a 9% IRR. And a 9% IRR, the sponsor receives, upon that, a 10% promote applied to distributions upon a 16% return. And obviously, after a 16, the sponsor receives a slight bump in total promote to 22% to remaining distribution. Like other offerings we provided, this being our 6th, we do charge a 1% asset management fee. In this particular ground-up construction project, we obviously are charging a development fee of 4.5%. And then upon stabilization, like any other project, we would charge a 2.25 property management fee upon leasing and stabilizing the project. The net returns to the investors are there on the right-hand side of 18.6 levered return, including the structure, and a 1.8x multiple. Next, we'll go through just the development timeline. The development timeline is articulated here at the top of the page. The construction will take about 13 months. The total timeline to stabilize the asset, in our opinion, based on our underwriting, is 40 months. We obviously hope to stabilize this project much sooner. Due to our conservative nature and underwriting and speculative developments, we've assumed no leasing will occur until after the project is completed, and it will take approximately 2 years to lease the project. Again, a pro forma underwriting. We've obviously been conservative. We hope to pre-lease the project. And lastly, we have received, as the top of the page mentioned, we have received initial grading permit. We begin to start site work next month. As you can see in the next steps in the timeline here summarized, we begin construction at the first part of the year in 2021, finishing in January 22. And then based on our pro forma projections of leasing, we'll do our first lease in the second quarter of 22, and then hope to sell this project in early 2024. And with that, that ends our kind of initial overall presentation on the Callis Road, 375,000 square foot Class A industrial development. We obviously want to thank, go back to the previous page, thank our key strategic partners here involved in this new development and all the hard work they've done to this point. So Scott, with that, I'll turn it over to you, and you could go on to the next slide.
Great, thank you, gentlemen. Yeah, let's jump into the Q&A here. We have a number of questions in the queue, so I'm going to start in the order that they come through. I also did want to point out that the Invest Now button is about to turn live in a few minutes, so if you'd like to place an offer, you would just need to load the CrowdStreet website in your own browser, navigate to the marketplace. You'll pull up this East Nashville's Callis Road offering on the marketplace, and then you'll see the Invest Now button right at 10:30 Pacific. So let's start here, gentlemen. I think you touched on this briefly during your prepared remarks, but if you could just expand on it. Do you have a GMP contract?
Yes, we do have a guaranteed max contract with Harvey Cleary. It covers all of the base building construction, totaling $22.14 million.
Great, thank you. Question here from Ravi. Will there be any impact from potential tenant absorption due to the area being tornado prone?
Great question. We think it actually might be an opportunity because a number of those projects are in flux in terms of their delivery dates and redeveloping. And as I mentioned in our tenant demand slide, we see a lot of requests for new space in this trade area. So not particularly.
Great, thank you. Is the land entitled already?
Yes, this was an assemblage of 2 parcels. We've consolidated, gone for replat for the city of Lebanon, and received approval for 1 plat as well as zoning for industrial use upon closing of the land.
Which occurred in July.
Great, thank you. And then are you contributing the land at cost or at the higher appraised value?
Contributing at cost.
Perfect. We have a question here from Ken. I see a variety of returns in your track record, including a few lower returns. What has been your general record regarding achievement of underwritten IRRs?
So our track record goes back to 1998. There's approximately 45 investments over that period. The weighted average return net to investors is slightly over 15% IRR, and our average cash yield is in the mid-6s over the entirety of that track record. As with any real estate investor, we have some investments that outperformed our expectations, and we have some that underperformed our expectations for various reasons. Typically, though, we are a low leverage investor, and as a result of that approach, that institutionally low leverage approach, we don't have any realized losses on our track record, and we actually only have 1 underperforming asset at the moment that is a below 0 return, but it's not realized yet. The building is in lease up, and we expect it to perform close to expectations by the time that investment's realized. Otherwise, the entire track record, or it's all positive returns.
Great, thank you. We actually have another question related to the track record. If you could just expand a little bit on this particular asset class as it relates to your track record. Do you have much experience in development of industrial projects?
So as Andrew highlighted on one of the early slides, our most recent industrial development was completed in December of last year, approximately 70,000 square foot building for a Canadian-based rubber company that's both a distribution and manufacturing facility. We have developed other industrial product dating back to 1998. On average, our investments have been running about 80% office and 20% industrial, including development and acquisition of industrial.
Great, thank you, sir. We actually have a question on the capital stack here. Do you mind just detailing the sponsor and affiliates tranche of the capital stack?
So the sponsor and affiliates is a partnership between Griffin Partners and CA South. That is a total of the 1.65 million.
And within that, Griffin Partners Fund 3 is about 2/3 of that equity, and our local partner CA South is about 1/3 of that equity.
Got it, thank you. We have a question here from Claire. With the project of this scale, why is it on a crowdfunding platform? Claire would think that it would be raising institutional capital rather than through CrowdStreet. Can you say?
Great question. As we mentioned, we have had a good track record of raising capital vis-a-vis the marketplace CrowdStreet platform. And we thought this was a good opportunity for some of our existing, 300 or 400 existing CrowdStreet clients, as well as any new clients, to invest alongside of us in a new development vis-a-vis the CrowdStreet platform.
And I will say, kudos to CrowdStreet, because when we had our first offering, I think the average raise on CrowdStreet was $3 million, and now it's substantially north of $5 million. So as CrowdStreet has successfully evolved and grown and created a marketplace that can fund larger deals, we have been raising larger deals, raising capital on a larger basis on the platform.
I would point out that we are moving forward this project. Obviously, we hope to be very successful in the CrowdStreet platform, but in terms of the dollar amount raised on CrowdStreet, we do have an institutional or LP partner backstopping the overall equity depending on the total capital raise here.
Perfect, thank you, gentlemen. Have you received permits to start working? Yes,
we've received an initial grading permit. That was in the last 2 to 3 weeks, and then as the timeline mentioned on the page, we should receive our site permit next month, and then building permits thereafter in December. We see no issues at this point receiving all of our permits as planned.
Great, thank you. Ravi is wondering if the buildings accommodate cross-docking.
No, they do not.
They do not. They're all rear load buildings.
Got it, thank you.
Typically, you would see larger developments of 500 to 1 million square foot buildings, as you can see in that trade area, that house folks such as Amazon and Bridgestone and FedEx, are typically larger in scale and have cross-dock flexibility.
Thank you, gentlemen. Question here from Matthew. What's your operating history in Nashville? He noticed a lot of repeat activity in Houston, Dallas, Phoenix, Raleigh, but nothing in Nashville. Have you undertaken a project in this MSA before?
So this is Griffin Partners' first project in Nashville, although we have had Nashville as a target market since 2004. 2014, and we have been tracking the market carefully and closely. We've pursued several investments there. This is the first one, however, that we are capitalizing and executing on. And that's one of the reasons why we chose to partner with a local partner in Nashville, CA South, who has a track record of development in the Nashville market. And they have a team on the ground that has development expertise. And our development team and construction team is working alongside their team to execute in this market.
Thank you. Question here from Peter. Can you go through the specifics of the loan? Have you actually closed on the loan yet?
Sure. So the loan is with CrossFirst Bank. It's $20.6 million. We have gone through several turns of the loan agreements, the various legal documentation. We are in line to close this loan after the crowdsourcing, I guess, fund date, which is, I think, October 27th that Scott mentioned. So that is as planned, and we've gotten all of our various approvals, credit committee approvals. In terms of the specifics of the loan, it's right there on the page there on the website page. It's a LIBOR loan, LIBOR-based loan with a floor of 1% LIBOR plus 325. It's actually a 36-month IO loan. It's actually a 48-month loan with, I don't know why this is 3-1, it should say 411, typo there. And we have recourse obligations, as I summarized earlier in the presentation, by us as a sponsor of up to $4 million. We also have a completion guarantee into completing the project to C of O, which is roughly $22+ million.
Great, thank you. We have a question from Nagesh relating to your previous projects on Crowd Street. Do you mind just detailing how they're performing and if any have exited yet?
None have exited. The first offering was actually in our fund vehicle, our third fund, which was closed to investment in early or late 2017. We've then raised equity through the Crowd Street Marketplace for 4 investments at the asset level. One is an office building, actually a mixed-use office over a retail asset in West Denver. One is a office building in North San Antonio. One is a portfolio of 3 office buildings in Charlotte, North Carolina. And then there's one office building in Salt Lake City. All of those assets are performing and making investments are performing and making distributions, with the exception of the Denver mixed-use asset. It was performing well, but because it has retail exposure and the retailers were impacted by COVID, we took the conservative precautionary step of suspending distributions in April, I believe, to preserve capital. Most all of those tenants have now begun paying rent again and are paying back the rent that we agreed to defer during the 3 months of April, May, and June. In most cases, one tenant was a regional lunch sandwich place that was actually filed for bankruptcy. So out of that, we lost one tenant. We expect distributions to resume to that property in January of next year.
Great, thank you, sir. We have another question here from Ravi, who noticed that the rent per square foot assumptions shown on the marketplace page here are slightly higher than what the rent comps are. How confident are you that potential tenants will accept the higher rents?
I'm a little bit confused by the question, but if you want to go to the lease up summary on the, let's see, I'm trying to find the financials. It's under probably the rent roll, which is under the investment financials maybe, or Kevin, can you point to where the rent roll is?
Our lease-up schedule is on the rent roll, which is under the project section.
Okay. Market leasing assumptions. Scroll down.
So if you scroll down to the project section.
Project section. Yeah,
one
keep
of the
going.
tabs
There it is.
is
Project
projected
rent roll. So our rents, starting rents range from $5.50 up to $8 per square foot. I believe the lease comps that we provided actually are in that range and higher, all the way up to $12 in starting rent rates. So we think we're at a discount overall from a net effective and a starting rate, depending on the size and term of the tenant.
Great, thank you.
Actually, I misstated. 5.25% is our lowest rate to as high as $8.
All right, well, a question here from Keith. You mentioned already that you've already acquired the permits. Is there any risk associated with the permitting process, completing the permitting process prior to beginning construction?
We don't believe so. We did have to get the property rezoned, and which we successfully completed after our acquisition of the land in July. And through that process, we were reassured by the folks in the city of Lebanon, including members of the city council, that the project is a desired use at this location.
Great, thank you. Why are you only building 375,000 square feet and not 500,000?
The site can only accommodate it, frankly. We wish we could have assembled a larger tract, but this is what we could provide the market. And we think it's as I mentioned, in terms of tenant demand, a great niche in the market to provide tenants of this size for this type of quality of space. We are continuing to look for more land sites to provide other projects of this same vein as well as larger. But again, it's just the site constraints.
Great, thank you. Do you plan to do any pre-leasing or pre-selling before starting or during construction?
Pre-leasing, yes. We don't plan to sell any of the buildings or the asset itself. We are out in the market now, as I mentioned, Ben Mosley with Cushman and Wakefield. We've put together our marketing materials. We've recently have a new name for the project, or we're deciding on a name, if you will, to finalize versus just Callis Road. And we surely hope to pre-lease the project. Frankly, a number of projects that have been developed in Nashville, I've seen an abundance of pre-leasing activity. Although we did not underwrite that to occur, we surely hope it can happen here.
Got it. Thanks for detailing that. Question here from Matthew. Given the recent tornadoes, can you provide a general overview of the business interruption or casualty or any other applicable insurance coverage that might be put in place?
We do have insurance for potential tornadoes and as a part of our programming here. We hopefully that does not occur in the future, but we are protected.
Including business interruption insurance.
Got it. Thank you. David asks, would you consider a sale earlier than planned if values rise more than expectations?
Yes, we would. Our objective, of course, is to generate returns to ourselves and our investors as indicated. But if there were an opportunity to exit early at a multiple in particular, which is probably more relevant, that exceeds our target multiple of 1.8 net to investors, then we certainly would consider that.
Great, thank you. Let's see here. We have a question about the Nashville's property taxes. An investor noticed that there've been some decent sized fluctuations over the past few years. How have you forecasted that in your model?
Yes, so we are in Wilson County, just east of Davidson County. Davidson County actually has just increased their tax rate in Davidson County by over 35% as of July 1, which we think is a significant impact to current tenants in Davidson County, and we'll be looking for opportunities to save on their operating costs. Wilson County is obviously materially less than that, and we've projected a slight inflationary rent growth, or excuse me, tax rate growth of 3% in our model. And we think the unfortunate event of raising taxes in Davidson County might be a boon for us to generate more tenant demand in Wilson County.
Thank you. Let's see here. What risks do you anticipate in this project? And then what are some potential upsides that you are expecting?
I would say that the overall risks are really the leasing, obviously velocity, overall tenant demand is always a risk in a speculative ground up development. We obviously think we can outperform based on our underwriting, the net rents. And frankly, we think we can outperform potentially, as I mentioned earlier, a pre-leasing opportunity here, which we did not underwrite. On the construction side, we obviously are hiring the best of the best. We believe in Harvey Cleary, who's a national contractor and done various jobs for us in the past, as well as their partnership with Powers Brown, who's a very sophisticated national tilt wall architect.
And we have a guaranteed max.
And we have a guaranteed max contract to perform that hard cost construction. So we see very little risk from a construction standpoint. The upside also is our cap rate and our exiting. We obviously would, as Edward mentioned, like to exit early if that's an opportunity. And we think the average cap rates for a quality product like this are trending down in the low 5 cap range, although we're underwriting in the high 5 cap range at a 5.75.
Understood. Thank you. Question from Lewis. Once the project is leased up, what is the project's debt service coverage ratio?
So great question. Upon reaching a 75% occupancy, the debt coverage reaches a 1.15. That's an important metric because that releases us as the sponsor from various recourse obligations of the debt. And then once it reaches above 90%, it's greater than 1.3. This is a construction loan. It's very typical measurements by construction lenders to provide those types of requirements in their loan documentation.
Thank you. We have another question about the fees. If you walked us through this already at the end of your prepared remarks, but do you mind just detailing the fees associated with this deal again?
Sure. So Griffin and CA South are charging a development fee equal to 4.5% of the hard costs of the project. That's actually indicated there. The number is correct. It's approximately slightly over $1 million total fee. We, as we have in our past offerings, charge an asset management fee of 1% per annum, 1% of the investor equity. It's paid in quarterly installments. Because this is a development project, those fees will be accrued. They do not bear interest in that accrual. They'll be collected once the project begins making distributions. After completion and upon occupancy of the first tenant, Griffin Partners will be charging a 2.25% management fee, and that 2.25% is applied to the gross receipts with a minimum of $3,500 per month. And then there's a construction management fee, which does not apply to the costs of building the project, but applies only to the costs of tenant improvements inside the space. And then in addition, the last fee is a loan guarantee fee. As we mentioned, Griffin Partners Fund 3 is providing a recourse guarantee of slightly more than $4 million, 20% of the loan amount. And the fund is receiving a $125,000 loan guarantee fee in exchange for that guarantee.
Great, thank you for that. We have a question from CJ. How does the cost of capital on Crowd Street compare to your institutional backstop?
That's a great question.
Really good question.
So the institutional backstop is not paying the asset management fee and is not subject to the promote over the performance hurdles that we outlined earlier of 9 and 16% IRR.
In exchange for them.
In exchange for providing that backstop. So they frankly get a slightly better deal, but they're providing a valuable service that ensures that we're able to close the capitalization of this project and move forward. And the difference in total returns is essentially the difference that you saw between the 18.76% net to the Crowd Street investors versus the 20.7% project level return. So it's about 200 basis points.
Great, thank you for detailing. We've had a few questions about if the market changes or if we enter a recession, would you be open to holding the asset for longer and just collecting the leasing activity?
Yes is the short answer. And we structured the loan as a 4-year loan with 2 1-year extensions with fairly low hurdles to achieve, to have our loan in place over the next 5 years. But yeah, 6 years, excuse me. So yes is the short answer, and we've structured our loan accordingly if that would occur.
Thank you. Question from Claire. How much is the gross return versus the net return?
Again, the gross return is 20.7, as you see there. And the net return is 18.6 for a 210 basis point spread.
Mm-hmm.
And the difference, 1% of that, of course, is the asset management fee, that spread. And then the other 1.1% is the difference in structure between an unpromoted investment and the promoted investment.
Got it. We have a question here from Glenn. How do the building specs compare to those Amazon is building nearby? Would this project be attractive to them if they're looking for additional capacity?
It's really a completely different product. The one just to the west, as I mentioned, which is a 3.6 million square foot building, totaling 92 foot clear. It's just a completely different animal. It's a large distribution location for them. I'll admit though, the 850,000 square foot building to the south, if they need additional space, we'd be happily to provide a building if they required it. It's not really our immediate market leasing strategy to lease to large users. That's not our strategic plan, but obviously we have the optionality to do so. And
the buildings, so that there's 3 100,000 foot buildings. So obviously we could accommodate a 100,000 square foot user in contiguous space within one building if one comes along and is willing to pay the rate.
Thank you. We have a question from Michael. Do you view this as a value proposition for smaller tenants, or are there strategic reasons for why these users might want to operate here?
Yeah, so first, yes, we do think it's a value option. As we summarize, we think it's a slight discount to competitive or more urban areas in Nashville. Frankly, and their operating expenses are less in this particular location because it's the way leases are structured on the industrial side. The tenants are paying their operating expenses. They're not gross leases, they're net leases. And then we think with the budding communities of Mount Juliet, Lebanon, La Verge, et cetera, those areas are seeing limited, if any, new development and limited supply of land. We think this is as a first entrant to this location is a great opportunity. We're seeing multifamily just to the north. We've got retail, et cetera, off of Diamond Interchange. We think it's a great opportunity for tenants to move in this direction.
Perfect, thank you. We are approaching the top of the hour here, so we'll just try to squeeze in a few more questions. Question from Nagesh, can you substantiate the rationale for the 5.75 expected cap rate at exit?
Sure, so institutional real estate in Nashville, we previewed a number of sales comps in our detailed package. I don't know if they're here on the program page here. If we want to go to the location section and go to sales comps, you'll see that the average cap rate is actually, I think, around 5.5% based on some of the comps we've found in the market. Second, that actually we don't have a lot of cap rate information, so sometimes it's hard to find. The lowest cap that I mentioned earlier was in the high 4% range for a exactly similar product in the airport area of Nashville at a 4.75. Obviously, other cap rates have ranged in the mid 5s to the high 5s. So we thought, based on our experience and the institutional owners in the submarket that already own in the marketplace, as I mentioned, Clarion, Stockbridge, USAA, Nuveen, be willing to pay a cap rate in this range.
All right, perfect. Thank you. We have a question here from Anne, who mentions that she hasn't invested with you folks yet, and she's wondering what kind of frequency, how frequently do you provide updates to your limited partners?
So we actually make monthly distributions to our partners. We communicate as often as we can. We also provide quarterly market updates on the market as well as each individual asset that we own.
And we provide monthly reports.
Correct.
Operating reports.
Great, thank you. Can you touch on other development competition on this road?
Zero.
There is a build-to-suit just south. It's about a 100,000 square foot project. It was initially designed for a multi-tenant, but it's evolved into a build-to-suit. So as in terms of competing within the exit, there's not any new product.
Great, let's wrap it up on this one. What's your exit strategy and who would your potential buyer be?
As I summarized earlier, obviously with the institutional names in the neighborhood, we believe that similar potential buyers could be in the queue for acquiring this asset. As I mentioned, I don't want to repeat all their names, but a lot of institutional owners already own in the trade area. Our execution plan is obviously we develop the project on time and on budget. We hope to pre-lease the project better than our pro forma at rates equal to or better than our underwriting. And if we can complete that process prior to 40 months per underwriting, we'd be happy to sell earlier and exit the project at a cap rate that we'd hope equal to or better than the one we've underwritten.
From an execution standpoint, we would hire a third-party intermediary, Cushman Wakefield, Jones Lang LaSalle, someone of that caliber and nature to do a wide marketing of the project.
Perfect, thank you. We actually just had a comment come in from Greg. As a current investor in another Griffin deal, I highly endorse the team and their excellent, regular, and clear communications.
Thank you, Greg. Appreciate it.
Thank you.
Thanks. All right, let's wrap up the call there. So thank you to the Griffin team. You gentlemen put together a great presentation and answered a lot of the questions in a clear and concise fashion. Thank you to the investors who joined us and took the time out of their day to send in their questions and learn about this deal. If you have a question that we didn't address, you can send it into the Griffin team through this questions box on the offering detail page, and either CrowdStreet or Griffin Partners will respond to you shortly. And I'll pass it back to you guys. Do you have any closing remarks?
Well, Scott, thank you very much for allowing us to present here on the marketplace this webinar. Thanks to all of our strategic partners that are involved in this Callis Road development. And Edward, any final remarks?
Just thank you to everybody who participated, and we look forward to hopefully hearing from you and happy to answer any questions.
All right, thank you, gentlemen. And you guys can drop off. I'm going to show a video to investors on how to create an investing entity and how to place an offer. So if you'd like to learn more about that, stick around.
Thanks, everybody.
Thank you.
Thank you.
Today, I'm very happy to walk you through step by step how you submit an offer to invest in a deal on the CrowdStreet marketplace. So to begin, I've just gone to crowdstreet.com, click on the marketplace here. I'm going to find the deal that I want to invest in. So for the purposes of this video, let's assume that it's this deal, the New Era Medical Fund 3. You'll see the Invest Now button here on the top right-hand corner of the screen. And now I am going to put in my investment commitment amount. That's just the amount that I would like to invest alongside my phone number. And then here you'll see that the next thing it's asking for is for me to select an investing entity. Your investing entity is just how we collect information about how you're planning on holding your investment. So the options include investing as an individual or jointly with your spouse, through an LLC, a trust, or even investing through a self-directed IRA. And then the information that you provide us about your investing entity will then be used to populate your investment documents, your tax documents down the line, and ultimately to direct your distributions from this investment back to the appropriate account. And if you already have one or more investment entities set up, you can just select the investing entity from this drop-down box like this. And then if not, you just need to click Create New here. For the purpose of the video, again, I'm just going to select individual investment, but you'll see here all of the options that we do have. And then I'm going to put in my social security number, my full legal name. If this was an LLC, for example, you may need to put in the full legal name of your LLC. I'm going to select my address, and then you'll see here, it's actually asking us to input our distribution banking information. That this information here is passed on to the sponsor so that they can then pay you your distributions down the road once they begin. So this distribution banking information will not be used to make any kind of automatic payment to fund your investment. Instead, it's used for incoming distributions that are going back to you from the sponsor. But you can update your distribution account information at any time throughout the life of your investment and really just update the account that your distributions will go back into. So once you've finished setting up your investing entity, you'll just need to go back to this page here, read and acknowledge these terms and conditions, and then submit your offer. Now we've completed the first step of submitting an offer, the entire process moves to what we call the transaction center, as you see here. And the entire process is completed online. So you'll complete step 2, your investment documents, just using DocuSign. I'd click Start DocuSign here if I wanted to. And then you'll see step 3, which is providing verification of your own accredited investor status. So you can upload a copy of the letter from your own CPA, financial advisor, and attorney, and we can provide you with a template letter to give to them. Or alternatively, you can click the link in your transaction center, which appears on step 3, to launch Verify Investor. And Verify Investor is our fully online integrated partner, and CrowdStreet will absorb the fee that they would otherwise charge you for their service. And then they can normally provide us with a letter stating that you are accredited within 24 hours of you uploading some kind of supporting documentation, such as a tax return, W-2s, account balance statements, and even perhaps a credit report, as the case may be. If you have questions or are wondering whether or not you are an accredited investor, please just search for accredited investor in the resources section here to learn more about the requirements to be accredited. And then finally, the fourth step would actually be you to send funds to the sponsor, and then you can normally fund by setting up a wire or an ACH through your bank. You can sometimes mail a check. You can draw the funds from your account via an ACH, just depending on whether or not it's enabled for this particular deal. And then once a sponsor has confirmed the receipt of your fund, they will then countersign your investment documents, and the investment will move from your transaction center to your portfolio page. Thank you very much for watching. If you have any questions on anything that I've shown you today, feel free to email ir@crowdstreet.com.
Thanks for joining us.